Welcome to today's Impact Debate, brought to you by Impact Lab, your laboratory for creative solutions. This is the second episode of our series tackling the future of money and the financial system. My guest is Roger Tooze, one of the founding fathers of international political economy, who has taught at the London School of Economics and other prestigious universities in Europe, the United States, China, and Australia. Roger, great to have you.
Good morning, Roman. Great to be here.
The signs that global economy is undergoing a significant change, probably the DNA in a certain aspect of the global economy is changing, abound. The crucial question, of course, is what is going to change and to what extent. So if we focus on money in broad kind of a definition, do you expect change within the system, which is overarching, let's say, thesis of most economists? And we discuss it in length with David Lubin in the first episode of the series. Or do you expect change of the system as such?
That's a great question, Roman, because at the moment I'm thinking of that there's going to be a change within the system, but also change of the system, because we are actually facing coming together of short and long-term changes, and changes at both the surface level and changes deep in the structure of the system itself. I suppose what the geographers would call the tectonic plates of the international monetary system.
That, I'm sure to many, is rather abstract. So let's give concrete examples. What is going on? What makes sense to follow at the moment? And what signals that the system as such is actually about to change?
Okay. The key thing is to remember that national monies used internationally are always political, whether we acknowledge it or not. And then most times we don't acknowledge it. When the system is working as it should, the political origins of the use of particularly the United States dollar are not obscured, but they're not in the forefront of people's minds. But every national currency is political. So in times of great political change, we are forced, hopefully, to look back at what are the political conditions which underlie, in this case, the use of the United States dollar as an international currency, previously the United States, the UK pound, and previous to that, other fiat currencies. So number one is that the use of the United States dollar is political, and we should think about that. Secondly, the deeper changes that are taking place include, of course, the technological changes that are taking place to rapidly begin to overtake the somewhat creaking system of international exchange, of payments, etc., etc. So it's not just the United States dollar in terms of a reserve currency, which obviously we'll talk about later, but it's what underpins all this in terms of the payment system, simple transfers of wealth, payments for goods, payments for services throughout the world. And that is rapidly becoming a changing world because of the rise of the digitalization, blockchain, cryptocurrencies, etc., etc.
Let's tackle at least some of the issues you just outlined, you just mentioned. The first, and I would dare to say relevant argument, is there are political forces and there are market forces, and they are about to clash. They're actually clashing already. And now, speaking of, for instance, supply chains, which is a trend already unfolding. Of course, on one hand, there's a will, sometimes ill will, of politicians. On the other hand, there is some sort of a market structure and logic, and these are clearly clashing, and there are market forces or market trying to circumnavigate some of the decision-making of the politicians, and you see that sometimes one is winning, the other time the other side, if you will, is winning. When it comes to money issues, and again, I'm using it in a broad kind of a definition sense, Do you expect that to be happening as well? Because as you said, there's a political framework, but then that you have some inner logic that also has its strength as well as weaknesses.
Yeah, that's a very good way of putting it, because this is always the case. It's always the relationship between the political forces and these days an integrated global market forces. And the market itself, if we can talk about market as a single entity, has particular preferences in terms of returns on investment, etc., etc. And of course, the market is global because we have instantaneous transfer of funds across the world. So you can interact with that market. But essentially, a lot of the time, the market and the political framework work in harmony. It's at times when they don't work on harmony, as you suggest, that we have major problems. And in this case, the problems are manifold in terms of, first of all, the current administration in the United States, but also in terms of the questions that many governments are asking themselves, particularly in the global South, is does this system, headed by the United States as the major reserve currency, but also remember what underneath the payment system, exchange rates, etc., does this serve our interest? And for many, many years, it was clear that it did, in many ways, serve the interest of most of the states in the system. There's obviously those whose interest it's never served, for example, during the Cold War, etc., etc. But even then, the Soviet Union used the system, the dollar-denominated system, in so many ways. For example, in terms of its exports of oil and things like that. So we're now in a situation where an increasing number of national governments are actually beginning to question whether the system works in their benefit. But also, ironically, of course, we also have the United States government asking whether the system works in its benefit itself under the Trump administration.
Is it, or rather, to what extent it is about Donald Trump and his policies? There's this assumption that many of his close aides work with the premise that you need to break something in order to build something new, better. So do you expect that logic to actually transcribe into Trump's approach towards monetary and financial regime, the global regime that seemed to be for decades, as you said, beneficial to most and thusly respected and accepted by most?
I think the key thing here is to understand that the policies of the Trump administration merely precipitated some of the long-term changes that were going to happen anyway. But the key thing is, of course, if you create a crisis, then through political acts, then the political context becomes more exposed. And therefore, we're actually seeing this, and in those terms. But the potential was always there. The interesting thing is that here again, there may be a contradiction in the Trump administration policies, which, as you say, they go out to break things and see what then happens. But at the same time, if you push this system too far, you start attacking the very basis by which the United States dollar is the top currency, as Susan Strange would have called it. And this is a real problem potentially for the Trump administration, and also, remember, for the rest of the world. Because these kind of things, although we're having this debate about them in sometimes esoterical terms, this is something that affects every citizen all the time. And it would be a great mistake for people to think, oh, these matters don't affect us. They're about, companies, corporations. They directly affect our standard of living. They directly affect what we can do with our savings, our pensions, our investment, etc., etc.
We'll get back to that in detail in the third part of the interview. Now, let's continue with the big picture, if you will. There seems to be kind of a dichotomy. On one hand, Trump says we need to change how things are being done, so it's beneficial to the US or more beneficial to the US. On the other hand, he says, and you all most likely are going to be displeased, but you have to be still part of the regime. Otherwise, you're going to be punished for it. There was a clear signal, especially towards the BRICS countries, that should they try to ditch dollar, he will punish them. Which, by this logic, seems that we are getting a bit of an academic newspeak, if you will, from the realm of soft power. There was a coalition of willing, accepting the US dominance, to the coalition of unwilling, which often is short-lived or generally has a fairly limited time span. Do you read the situation as such, or would you argue that there are certain nuances or that it is different as we speak?
I think your analysis is pretty accurate at the moment. The issue in terms of the continued use of the dollar and the maintenance of the United States dollar as the top currency would be that underneath it all, there's increasing concern about the level of the United States debt, because of course the use of any currency depends upon the confidence that people have in the currency. Now, there are certain technical requirements, system requirements that the market puts on in terms of the use of the dollar, which in the past, of course, have not been questioned. Yet we're getting to a position at the moment where, from my point of view as an international political economist, the confidence that other countries have in the ability of the United States to manage its economy, but also to manage its debt. And the United States national debt is approaching 37 trillion United States dollars, with the analysis suggesting from the Congressional Budget Office that if Trump's policies are followed through, that will rise to 45 trillion United States dollars. And this begins, from my point of view, to question some of the assumptions, some of the basic underlying confidence that other countries, other governments might have, and corporations, of course, and individuals have in the United States ability to pay that, to stabilize their economy. So we have basically a very clear situation emerging, which, whilst at the same time as I agree with your previous contributor that in a market sense, the United States, there are no challengers that are adequate for the United States dollar, but underneath the circumstances, the conditions necessary for the continued acceptance of the United States dollar by other people, to use a current phrase, a coalition of the willing, and partly because that willing coalition saw the use of the dollar in their own interest, of course, maybe begin to raise questions as to the continued structure and the continued use of the United States dollar as both a reserve currency, which is probably fairly stable at the moment, but also in terms of payments and other functions of an international currency.
So, to what extent would you say that debt at the moment is the key issue to watch vis-a-vis the future of the system as such? Things like the Chinese issuance of debt in Saudi Arabia, meaning an attempt to actually create a financial center, strong one, that is global but outside the realm of the West, because so far, excluding Hong Kong, let's say, which is a special, given its history, case, it is all, or it has been all about the West. So there are clear attempts, clear signals that there are attempts, and more of them, that China and others are trying to erode the system from within, in a sense, because this is still following the logic of the game, right? Back to square one. So is the debt sort of a case study, in a sense, in this particular issue?
World debt general has shown an alarming increase. The debt of both China and the United States has also recently grown enormously. For example, just in the past 5 years, the United States debt has increased probably by a huge amount, nearly a third from 2020. And as I already said, the projection is that it will increase by 8 to 9 trillion anyway. The Chinese moves are interesting in the sense is that they would in one way be very, very keen to increase the use of the RMB, both as a reserve currency, renminbi as a reserve currency, but also as a transactional currency. And to a certain extent, they've been much more successful in terms of a transactional currency. But the problem with the reserve currency is as a simple, conventional economic answer, is that because they are loath, for reasons we could explore, to move the RMB into full convertibility. They have capital controls, etc., and the condition of full convertibility becomes absolutely necessary today for any currency to be used as a reserve currency, but also for a transactional currency as well. So it's limited. The move into Saudi Arabia is interesting. The creation of an offshore center. Don't forget that London is already, the stock exchange is already touting itself as an offshore RMB center, but these are very, very limited numbers in terms of the overall amount of currency used and in terms of the reserves of any one country, because of course the Chinese government, either for ideological reasons, which some outside observers say is dominant, or for reasons of simple control and maintaining social stability, will not let the RMB in the foreseeable future become fully convertible. So from that point of view, even though these moves are interesting in a geo-economic sense, in other words, an extension of maybe the Belt and Road, or in terms of external policy into the Middle East, because China doesn't have a firm position within the Middle East compared to the United States and others. So moving to Saudi Arabia is very, very interesting in this geo-economic sense. I can't see it as being of major significance in pure terms of the changes taking place in the international monetary system in the short run. And I think we do have to emphasize this is about the difference between the short run, the immediacy in which the United States dollar is really not challenged, despite being used less and less over the years, partly as a result of the fact that the United States economy itself is a smaller proportion of the world economy, but also in terms of the availability of other fully convertible currencies, the euro, yen, sterling, etc. So we have a situation at the moment where, yes, there are many potential and I won't say competitors, alternatives perhaps to the US dollar, but at the same time, I would agree with David Lubin that there is no immediate challenge to the United States as a reserve currency. I would not necessarily say that in terms of transactions, because there are other things happening within the transactions field.
Not only China, but also countries, regimes fairly friendly towards the US, such as India, are buying less and less of the American debt. And of course and this is a warning that, for instance, Ray Dalio, one of the well-respected market players, hedge fund managers, raised a couple of times already in the course of the past years, can lead towards or to social instability in the US, because of course this equals the debt equals funding of basic state institutions and institutes. Is that something that you take seriously, or is it rather a mental exercise at the moment and then a near to mid-term, let's say 5 years, to put a timestamp on it, future?
The question of debt, and I would agree with Dalio on this, is of fundamental importance, because it underpins the confidence that the outside world has in using the United States dollar as their reserves, in other words, a store of value, and also in terms of transactions, in terms of its liquidity. Now, the United States accounts for about 64% of total world debt at the moment. It also accounts for just under 60% of international payments and 80% of the financial market transactions out of total 200%, because there's two currencies involved. And in 2025, the United States represented 60% of the global reserves. Well, now that's down from 5 years ago when it was just under 70%. So obviously things are changing. What is important here is to strip away the non-questioning of the debt itself, and already the Trump regime, the Trump administration in the United States is battling this, because there's a lot of the market watchers beginning to say, look, this is not just a problem for 5-10 years down the line. This is actually a problem now. The combination of inflation and debt is political dynamite. And it always has been throughout history. One of the explanations for the downfall of the Roman Empire is the inflation through the currency. So it's a fundamentally basic problem, which economists by and large, because of their assumption that all things being equal, all things just don't focus enough on. And this is this idea of the confidence in the United States dollar. So I think at the moment, and particularly in the United States, with inflation going up and the failure of the Trump administration to be seen to be adequately addressing this, whether this will be addressed later on is another problem. But at the same time, the potential massive increase in the debt itself is clearly, in my view, going to present potential problems, not just within the next few years, but essentially down the line, because managing a debt of up to $45 trillion at the same time cutting taxes will upset not just non-American holders of the United States dollar, but also the American markets themselves. And already the bond markets, so-called bond vigilantes, are beginning to respond to this.
So one thing to watch and watch out for, if you will, is debt. The other, and you already mentioned, is the very fact that when it comes to these kinds of discussions, for many people, for most, I would dare to say, it is about the reserve currency, while of course it is not, as you suggested by tackling this issue in the previous answer. So if I now ask about what is it in particular you recommend to follow as well, reserve currency beside, of course it's trade, what else? Where do you see that the system might be or is changing?
That's a good question, because when we actually decide on a topic to discuss, the key realization is, of course, is that everything's interconnected. And the United States dollar did not become the principal global reserve currency by accident. It was because a combination of the United States being the dominant economy, the fact that the United States was leader of the coalition that won the Second World War and was able to construct a system which, despite what the Trump administration is saying, inherently benefited the United States. There would have been no United States dollar system unless it had benefited the United States. So we're in a situation now where it's clear that moving out of holding the United States dollar in the short run completely is not possible, and I would never suggest that it is. On the other hand, and it's what struck me over the past 3 or 4 weeks, is the number of bond agencies and investment banks in the United States beginning to recommend that holders, external holders of the United States dollar, begin to diversify their currency holdings. So you diversify into the so-called alternative sources, yen, sterling, euro, etc., etc. At the same time, begin to look at other sources. And it's notable, for example, in times of political crisis, the price of gold has risen significantly to almost a modern world record over the past week or so. And this is reflective of the uncertainty of the markets itself. So diversification, but at the same time, to be aware that what happens in these matters is you get gradual increments, and then suddenly the market takes fright. And this explains all kinds of potential behavior. But in this case, the market might take fright for good reasons, as opposed to some other market crashes, which have not been for particularly good reasons. And that is the underlying issues that the United States economy now faces in sustaining the confidence of the markets. And one of the reasons to doubt this is the debt, and the other one is, of course, is the economy, the management of the economy itself. The UK itself was taught a very painful lesson by the bond markets in recently, when the yield on bonds was forced up enormously in a very short time because of mistakes made by the prevailing Conservative government, a very short-term government. As it turned out, because of these changes. And the market sometimes is very difficult to buck, but also the market sometimes doesn't actually understand what's going on.
On the one hand, it might seem this demand for an alternative as a good news for the Eurozone, for the Euro. On the other hand, of course, looking into what is going on in Europe and especially in Germany lately, even though there seems to be a light at the end of the tunnel, there are certain doubts and reasonable doubts. What is your reading of the current situation? Is it good, what is going on and is expected to be going on for the Euro, for the political project? Because everybody understands and everybody takes it as a political project, which it is.
Yes, indeed. Of course, the international use of the euro has not been as much as the founders of the euro and the treaty which set up the euro expected. In that sense, it's been a disappointment in terms of its use as both a reserve and as a transactional currency, even though the numbers aren't bad, but they're not as much as hoped and expected to give the euro the kind of clout within the international system, the international monetary system, as was hoped. And that's partly because the other measures that came with the establishment of the euro have not been carried out within Europe itself. The financial integration, in terms of financial services, etc., etc. So, to a large extent, we still don't have a fully integrated financial and economic system within the eurozone, and this is reflected in the hesitancy that other people have, and indeed the members of the eurozone itself, who predominantly hold dollars as opposed to euros in their reserves. So, at the present point in time, with the geopolitical and geoeconomic crisis coming together, unless there is a substantial spurt in the processes of integration, which a number of senior political leaders in Europe are asking for, in fact demanding, because they see the logical necessity for this, then I don't think there's going to be a major change. In fact, there could be less usage of the euro rather as an external and reserve currency than before. This is all complicated, of course, by Ukraine and defense, and this is one of the areas where the geopolitics and elements of security and money really come together, because we're talking about massively increased levels of debt, massively increased levels of spending on defense, which are not entirely negative, particularly in terms of the European and perhaps UK defense industries, but at the same time, these have repercussions in the system of highly interrelated areas, domains of money, trade, investment, production, manufacturing, and services.
Are we in a sense, at a historical crossroad, meaning that there'll be either more Europe, more European integration that seems to be, and you just mentioned it as well, a must for the euro and generally European economy to really work as a unit, a powerful player on the global scene, or that Europe is going to be up for grasp, meaning that, you know, to use the beautiful citation used by among others by Parag Khanna, that Europe is going to be at the table or on the menu? Is it being decided right now as we speak? And Ukraine seems to be sort of a way how things materialize, but of course there's a broader context around.
I think that's right. I think we are, and it's very tempting to see every crisis like this, of course, and hindsight is a wonderful way of correcting our arrogances often. But at the same time, I think we are at a crossroads, simply because this crisis in European continental security is a reversal of a lot of the assumptions that we and pathways that we've worked with over the past 50, 60 years in terms of our security, our relationship with the United States, and our relationship with each other. And the so-called peace dividend, which most countries in Europe have been able to live very well off, has come back to haunt us, which many of us, including myself, have argued that it would always do this, because you can't continue to enjoy a condition without actually eventually understanding the broad sense of what other countries are giving up to give you that condition. And this has actually come to fruition. So what that means in terms of Europe is, I think, simply there is a logical necessity if Europe is to continue along the lines it set out, but also in some sense a survival necessity in terms of both economic and political and security reasons for the various countries of the European Union to actually do something about it. Unfortunately, of course, we're now faced with a situation where many of the countries of the European Union have different views. So, and of course, Hungary differs from Poland, and Poland differs from Austria and Slovakia. So, and in the latest initiative fronted by Keir Starmer, the British Prime Minister, for example, one of the big economies, Spain, has said that it's not going to participate in the way that other people are going to participate. So I'm not underestimating the problems and what's to come. I'm merely suggesting that there is a necessity, if the EU and the EU countries that make up the EU, and certainly the Eurozone, want to continue as a bloc to be taken seriously by the rest of the world, then something is going to have to happen. That's something, of course, we could talk about for the rest of the day, but something has got to happen. And in this sense, we are at a historical crossroads, prompted, I think, but not created by the crisis in Ukraine.
You've mentioned technologies at the beginning of our debate, so let's focus on that. What kind of a role technologies, opportunities, as well as threats are playing in this, I don't want to say equation, but in this story? And of course, we need to distinguish the sort of a state-owned, controlled, run projects. Let's get back to them later. And non-state, state eruptive, if you will, or disruptive technologies, such as Bitcoin. Let's just focus on Bitcoin as such. And again, back to the US, on the one hand, Bitcoin is anti-state in its DNA. It is written clearly. On the other hand, Donald Trump, and not just Trump, but it is Trump whose voice is heard right now the most, says, let's make it part of the system. What do you think of that?
It's very interesting, the developments. Let's just remind ourselves that this is part of a whole series of changes that have been prompted through digital technology, new technologies. I mean, it's easy to forget when we're looking at things like this that, for example, there's been a complete revolution in Africa over banking through having software attached to phones, which allows people to open accounts without, 1,000 miles away from a bank and never be near a bank, and through a very, very cheap phone. So, I'd like to put the cryptocurrencies and digitalization within that broader context. Also, of course, because Trump himself is standing to benefit greatly from crypto. He even has something called a meme coin in his wife and his name, which went up enormously when he was elected, but unfortunately for him has come down. And he's also signed an executive order, which essentially, and I'm quoting from it now, backed lawful and legitimate dollar-backed stable coins to bolster the greenback's dominance among conventional currencies. So we have a United States administration led by a president that firmly believes in crypto. But of course, as you pointed out, the key thing about cryptocurrencies is they are anti-state in themselves. That is where they come from, and that is where they will go. And this, of course, goes fundamentally against the reason why we have fiat currencies, paper money, in the first place, because the idea is and will be for governments, for states, for national authorities to control currency, because control of the currency is equally as important as having, perhaps more important, having nuclear weapons, defensive forces, etc., etc. So the creation of the cryptocurrencies was, as you say, for Bitcoin, was specifically against the power of the state. But for the rest of the world, and it's been reacted to in the rest of the world in this way. What's interesting is there been the development of so-called stable coin, which is coins backed up and against actual currencies or actual nominal or real assets. And the use of stablecoin is specifically mentioned by Donald Trump in his executive order. The stablecoin, the two dominant ones being Tether and Circle, are used extensively in today's payment system. For example, in the last year, 2024, 27.6 trillion US dollars was enacted in payments across the world using stablecoin, predominantly through Tether itself. So that's amazing. And interestingly, the center for this is Turkey, Istanbul, and but also increasingly in Africa, because of the lack of banks and the clunkiness of the existing system of correspondent banks. The use of stablecoin in terms of payments is increasing enormously because it's fast, it's reliable, and it's done on a public blockchain, which means it can be inspected as such. Now, stablecoin, of course, can and the technologies are often used by banks, central banks as well. But as you said, we can talk about that later. But I think that's a really interesting reflection. What Trump is trying to do, of course, by threatening members of the Global South, the BRIC countries, is to sustain and enhance the use of the United States dollar, because he perceives, as many people in the rest of the world have perceived for many, many years, that the United States gets what the French finance minister, Valéry Destin, called exorbitant privilege out of the use of the dollar. And Ben Bernanke, when he was chairman of the Federal Reserve, argued that because the United States now only contributes below 70%, the exorbitant privilege is going. But to my view, as a political economist, the exorbitant privilege is still very much there. And it means that for many years, the United States has been able to run a massive balance of payments surplus and a massive budget deficit. Sorry, not, budget deficit for as long as it wants without any major repercussions, because, as you said previously, the coalition of the willing has been able to continue to accept the United States dollars both for reserve and transactional purposes.
When it comes to state-run simplification, digital currencies, it seems to be the case that the Chinese are ahead of the pack. Is it a force to reckon with already when thinking about near to mid-term future? Can it be sort of a game changer? at the moment within the system, but eventually one of the drivers of the change of the system as such. And you've already mentioned it. It is to a very large extent about control, not only internal, but also external. This seems to be part of the so-called digital Silk Road, meaning the aim of the Chinese to create infrastructure and institutions that will enable them to project their power abroad.
Yes, I very much agree with that. The experience of a so-called CBDC, a central bank digital currency, it's been extensively tested in China. Some of the people I talk to who use it are very happy with it. Some people are not. It just depends on the example of the ease of use as much as anything else. And what's interesting about this, of course, is that it in terms of efficiency of transactions, it is very clear that it's much more efficient. It's cheaper to run once you establish it, but it's essentially from a Chinese point of view, I think you're right. It is about control, and it's about not just control in a macro sense of credit, and we know how sensitive the Chinese government is to who controls credit from the experience of Jack Ma, the Alibaba head, who was severely reprimanded and punished for daring to create a system which, in effect, was a bank, and allowed people to build up credit balances on that system. So it is about control, but at the same time, it is very efficient. It once it's established, it can allow enormous efficiencies in the system. It allows instant information, so there's feedback, etc., etc. And I think I know almost every other central bank in every reputable country is using this, and some not so reputable countries as well. In terms of their currency issuance and the way that transactions are carried out within their national territories. In the Chinese case, given such huge spread of territory, given the banking system is one of the areas which I suspect, if they would admit it, they would be forced to admit that some of the areas they've lost direct control, particularly in terms of the shadow banks and things like this. The control of credit becomes absolutely crucial, particularly at this point in time when the Chinese economy is having a massive problem with debt and credit, and at the same time facing a massive crisis of confidence in house building, and probably now with exports as well, because it's led to post-COVID recovery in terms of exports, which the Trump administration are determined to clamp down on.
You just came back from China, and of course you go regularly for decades already. What is the situation like at the moment? And again, let's focus on money and financial side part of the economy. What is it that we don't see? Generic expression, meaning Westerners, Western media, and commentators, and is already happening, and you think deserves attention?
Yeah, thanks. That's an interesting question, because of course there's much of this is not transparent. So we're beginning to think, what information we get back. And the information we do get from the media and from the Chinese banks and authorities is in line, and has to be in line with the overall position in China. Nonetheless, one of the things that strikes me always is the extent to which Chinese society in most of the cities that I visit, and even in some of the countryside areas, is so completely digital now. To such an extent that in an 8-week period recently, I didn't use any cash. You just don't, and that we're moving towards that in the UK, but not in the US, from my last experience anyway, so fast. And so this digitalization, the fact that everything's via your phone, linked into the process of identification through your phone number, your ID, etc., makes economic life very, very fast, very smooth, but also ultimately controllable, because simply if you lose your phone, you've had it. But at the same time, of course, there are major problems, and talking to people generally, businesses, commentators, other academics, there is a sense of flatness in the Chinese economy, which I know at the moment, of course, there's this second meeting taking place, and this morning they announced a potential reflationary attempt in terms of the housing market, etc. But the general sense is that the government, the Chinese government from Beijing, are going to have to do a lot more in terms of investing in the economy to rebuild essentially trust. And it's trust in the architecture, the institutions of the Chinese economy, which has fundamentally been tested, in some cases broken, by the experiences of COVID.
Roger, let's focus on, if not recipe for success, then recipe for survivor. In these tumultuous times, we outlined and touched upon many sources of uncertainty, if not outright risks. Let's start on the state level, small open economies such as the Czech Republic. What should be and could be done, and let's reflect the technologies that we just touched upon. Again, a lot of possibilities, but also disruptive force, and no argument there, risks for traditional economies, industrial economies. And again, it goes both on the technological as well as geopolitical level. We didn't talk about homeshoring, nearshoring, friendshoring, and all these issues that again are very much political and are rewriting the DNA of globalized economy.
Yeah, this is a real problem, I think, especially for smaller open economies, which by virtue of their openness are in a sense have to be reactive. And they can only be proactive in the context of larger groupings, in the Czech case as members of the European Union, but not, of course, as members of the Eurozone. So what we're facing is essentially a potential long-term change in the way that states actually operate, with a recalibration of the nature of risk and an openness and awareness of what we can talk about as risk and what essentially, for me as a political economist, are uncertainties. And it's really important, I think, for national authorities to make this distinction. Risk, by definition, we can calibrate. We can do something about. Uncertainties, the famous unknown unknowns, if you like, are something that all we can do is run the scenarios. We just cannot put a risk factor to them. We cannot use the financial system to insure against it. We cannot hedge against uncertainties by absolute definition. And I think we're in a period where the known and the identified but unknown in terms of extent risk are overshadowed by the uncertainties. And most of these uncertainties come from geopolitics, geosecurity, etc. And you can perhaps limit these, but at the same time, we can do something about the risk. So there is clearly a potential risk from the balance of reserves that smaller countries hold, and that would need to be looked at. There is clearly a potential risk which links the monetary system to the trading system, and of course, particularly in the Czech case, to the investments. And the status, for example, of the Czech Republic as a partial extension of the German automobile industry would have me worried. And that's not just because of what's happening now, of course, it's because of all the uncertainty within one particular sector. And this is reflected into various other sectors, but also various other domains like trade, investment, money as well. So just to separate out the financial monetary considerations, it is often quite difficult because these would change with the trading, the investment, and the overall geoeconomic and geopolitical situation itself. But diversification, thinking carefully about your internal, the way you use currency internally, making your internal system of payments as efficient as possible through digitalization, and maybe at least the looking at the internal use of the central bank direct currency, digital currency, sorry, are all things that I think we should be aware of. At the same time, opening our minds and opening the government's minds to the fact that we are, in all probability, in a situation where the risks themselves are not computable because of being overwhelmed with the uncertainty.
Okay, one step down, if you will, a company level. A company, and by definition, there is a certain exposure, no matter what you do to the outside forces. What could and should be done by the owners or managers? And of course, these are interlinked issues. So many of the things you mentioned vis-a-vis the state, the proactive, reactive, in this sense, state, are going to apply to the companies as well.
Yeah, I mean, I'm glad you're asking this because there is a sense, certainly among some of the smaller companies I talk to in UK and in China, actually, that, well, this is not something we would, we're not engaged in international trade. It doesn't affect it, but of course it does. It affects you directly in terms of interest rates. It affects you directly in terms of credit, bank loans, etc., etc. So for those engaged in international trade, there could be significant changes in exchange rates, hedging against the exchange if you can, use your national guarantees, use your insurances that most of governments of the European Union use for export trade guarantees, etc., as much as possible. It's about not stopping, but continuing with as much security as you can garner at this point of change. But at the same time, and this is a Chinese saying, the terms of crisis creates opportunities. And let's not be blinded by all the noise from the crisis, or the series of crises, as I've tried to paint it. There are very distinct opportunities here, some caused by the direct policy impact of tariffs and things that the Trump regime might do, the Trump administration might do, but also some caused by longer term changes within the European political economy and within the global political economy itself. So periods like this always have opportunities if you are brave enough, but also at the same time, if you're also confident that the guarantees and the risk that you can identify, bearing in mind as a board or as a CEO that there are things that might change radically that will completely upset any calculations that you might actually make.
Last but not least, what can we do as individuals or households? What would be the sort of recommendation for the period of uncertainty?
That's a great question, isn't it? Because ultimately everything does come down to what we, or what the economists call households as individual units of economic activity. But we're individual units that have morals, we have values, we have other things we want to do. We're not driven totally by material considerations. However, having said that, it's about ensuring security, I think, of pensions, investments, making sure that as individuals in periods of change, and that we feel that we are confident enough in our economic future. Unfortunately, given the upheavals in certain sectors and given the upheavals within, generally on a macro level within Europe and the rest of the world, security of employment is a big issue, it seems to me, increasingly. And I suspect in certain sectors, we've already mentioned the automobile one, and engineering also, there would, for Czech citizens in particular, but also for citizens in the European Union generally, there is a period of uncertainty coming in terms of employment as the economies are trying to adjust to changing circumstances. As ever, it's keeping your economic circumstances in line with your values and also the things that are important for you.
This was the second impact debate of our series tackling the future of money and the financial system. The series is part of preparations for this year's Impact Forum, our 7th annual economic forum in Kostelec, and we are honored that Roger Tooze will join us as a speaker this May. Roger, thank you for your insights, and I'll see you in Kostelec.
Thank you, Roman. It's a pleasure, as always.